Since the advent of ChatGPT, there has been a number of other generative chat text platforms that have cropped up in recent times to try to compete. The most recent of which is Bloomberg GPT. From Tech at Bloomberg's Twitter, meet Bloomberg GPT. This 50 billion parameter large language model was purpose built from scratch for finance using a unique mix of Bloomberg's data and public datasets to support financial NL proc tasks. Well, so what does this mean? In Bloomberg's opinion, the general ChatGPT is not well suited for using that AI for financial tasks. And so they have taken it upon themselves to build a specific model for their own platform. For those of you who are not familiar, Bloomberg is a gold standard in terms of financial data. It costs around $20,000 to $30,000 in a subscription per person, and it is widely used throughout the finance industry. However, the main downside with Bloomberg is its greatest strength, the great array of information available at your fingertips on the Bloomberg platform also means it is that much harder to be able to access and know how to use efficiently and effectively. What this Bloomberg GPT might be able to do is open up the platform for more users to be able to use more easily because you can ask Bloomberg GPT more natural language questions and have it answer those questions for you. You no longer perhaps need an in depth understanding of how to code within that platform. However, because we do not have access to Bloomberg's platform at the moment, although we did request access for Bloomberg GPT to test out, we will be taking a look at their main competitor, ChatGPT, to answer the question, can we use AI to pick our stocks for us? So let's take a look at our conversations with ChatGPT. Alrighty, so to begin with, we asked it a very simple question. Compare SCHD and JEPI. These are two of the most popular and famous dividend-focused ETFs in existence. And so here is their response. SCHD and JEPI are both exchange-traded funds, ETFs, that focus on dividend-paying stocks. However, there are some key differences between the two. SCHD, or the Schwab US Dividend Equity ETF, is an ETF that invests in US companies with a history of paying dividends. The fund tracks the Dow Jones Dividend 100 Index and has a relatively low expense ratio of 0.06%. Moving down to JEPI, the JEPI, or the JP Morgan Equity Premium Income ETF, is a bit different in that it invests in a mix of large US large cap stocks and short term call options on those stocks. The fund's goal is to generate income from both the dividends paid by the stocks and the premiums received from selling call options. JP has a higher expense ratio of 0.35% compared to SCHD, but also offers a higher yield. So there are two questions to ask at this point. Number one, are the facts presented here accurate? And number two, are what's provided here actionable? So to begin with, number one, are these facts accurate? We can double check the work done by ChatGPT by referring to the original sources. So if we move over to Schwab's website, this is their page for SCHD. And as we can see here, the expense ratio is indeed 0.06%. And the fund's goal is to track the Dow Jones US Dividend 100 Index. So it seems fairly accurate. And then for JP Morgan, here we have JP Morgan's page for JEPI. And scrolling down here, we can see that the expense ratio is indeed 0.35%. Scrolling down to their portfolio goals, we can see here that they do some stock picking along with options overlay, more specifically out of the money S&P index call options to generate that additional yield. So it looks like ChatGPT here is correct in the factual information that it presents. However, this is a very general overview, and I would say that this is not necessarily actionable beyond what a basic cursory Google search can provide you. So these were ETFs. What about stocks? More specifically, I had asked it about Chevron versus Exxon dividends. Here we get the standard disclaimer that as an AI language model, they don't have real-time data, and that their knowledge cutoff date is September 2021. Fair enough. However, the previous time I did ask it, there was no such disclaimer given at the top of their response. And here is their original response to me. Chevron and Exxon are both major players in the oil and gas industry, and they both pay dividends to their shareholders. However, there are some differences in the dividend policies of these two companies. In terms of their current dividend yields, as of April 3rd, 2023, Chevron has a dividend yield of around 4.2%, while Exxon's dividend yield is around 5%. This means that based on the current stock price, Exxon is paying out a higher percentage of its earnings in the form of dividends. Now, as mentioned in the prior disclaimer, what they're claiming is as of April 3rd, 2023, obviously because their knowledge cutoff date is 2021, this is generated text taken from other information and as a prediction. And we will double check if these two numbers are correct in a few moments. Moving forward, let's look at their next claim. Looking at their dividend histories, both Chevron and Exxon have been paying dividends for many years and have a history of increasing their dividend payouts over time. However, Exxon has a longer history of consecutive dividend increases, having increased its dividend for 39 consecutive years, while Chevron has increased its dividend for 34 consecutive years. It is worth noting that both Chevron and Exxon have had to cut their dividends in the past due to changes in the oil and gas market, such as during the COVID-19 pandemic. In 2020, Chevron reduced its dividend by 32%, while Exxon cut its dividend by 50%. So now this is interesting. 2020 is before their 2021 knowledge cutoff date, so we can test to see whether these claims of Chevron cutting its dividend by almost a third and Exxon cutting its dividend by half is accurate or not. And again, to test, we can go to their source materials. So if we go to NASDAQ, we can look at Chevron or Exxon's dividend history. Unfortunately, we can see here that the current dividend yield is 3.09%. And for Chevron, their current dividend yield is 3.57%. So in both counts, ChatGPT is wrong in terms of their current dividend yield, which is forgivable, again, because they had disclaimed in a future disclaimer that their knowledge cutoff date was 2021. What about this claim of dividend cutting in 2020, which is supposedly before their knowledge cutoff date? Well, as we can scroll down here for Chevron or Exxon's dividend history back in 2020, we can see that there were no cuts at all, much less a 50% cut for Exxon. And for Chevron, if you scroll down to 2020, again, we see no cuts at all, much less a cut of a third. And so, as of yet, it looks like ChatGPT is an unreliable source to use when analyzing individual stocks at the very least. And so we will see in the future if Bloomberg's GPT chat proves to be a much more reliable source. But for now, I would say let's stick to our own research when doing stock picks. Hopefully this has been helpful. And for all your dividend investing needs, check out DivIncome, available both on the App Store and Google Play.